All right.
The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody, welcome to this webinar about the characteristics of the Kiwi dollar. Brought to you by OctaFX. OctaFX, an award-winning broker that has one of the lowest spreads in the industry. A bit of housekeeping, a risk disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And a hypothetical trading disclaimer, the information provided in this webinar is provided as general market commentary and does not constitute investment advice. Quick words about myself. My name is Yochai Lam, I'm a Forex analyst. I used to be a retail trader and a computer programmer. I founded Forex Crunch back in 2008, and the focus there and also here is on fundamental analysis, but also a bit of technical. So, when we talk about the Kiwi dollar, we're talking about the risk currency. Then we'll talk about correlations with the Australian dollar and commodities, correlations and influence. And we'll move to the indicators, which are the fewest, I think, the least number of indicators, interventions in the Kiwi dollar. Not something many talk about, but we see it also there. And we'll discuss its technical behavior. Each currency pair has its own technical curiosities. So, it's a risk currency. What does it mean? New Zealand still has a relatively high interest rate of 1.5% at the time of this webinar, but in general remains above most developed markets. It was 8.75 just before the crisis 10 years ago. It used to be a carry trade. Investors would lend money cheaply in dollars and yen, most importantly, and would invest into risk into the New Zealand dollar. The same happened for the Australian dollar. New Zealand dollar even had a higher edge because of its even higher interest rates. The New Zealand dollar reacts to global events even if New Zealand is, for many people, very far away. And sometimes, regardless of anything else, similar to the Australian dollar, when we have an improvement in the global mood, we have a stronger Kiwi dollar and the other way around. So good news can be really from the other side of the world. Optimism, for example, by the European Central Bank, means the whole world is growing, and why not take a risk and invest also in the Kiwi dollar. And bad news can come from the US, also, closer, but a bit even, but still further away. It can be bad news. We have negative implications about global growth from troubles in US politics. It can weaken the Kiwi dollar. Reactions are milder than in the Australian dollar. The Australian dollar is a bit more connected, but they're certainly noteworthy. Global mood, if it improves, it's good for the Kiwi. If it deteriorates, it's bad for the Kiwi. For those of you who aren't familiar, the Kiwi is the national bird of New Zealand, and the currency, the New Zealand dollar, is often called Kiwi. Now let's move to correlations. Correlations with the Australian dollar. I already mentioned it a few times. Australia is sometimes seen, rightfully or not, as New Zealand's bigger brother. Okay, these countries have a lot of it in common, but their currencies not always behave the same. Sometimes good news in Australia boosts the New Zealand dollar. Okay, so we can see the Kiwi dollar sort of getting carried away by its neighbor. The neighbor is not that close, by the way, for those who look at the map. But in any case, there's a great correlation. And of course, the other way around, we hear about some bad news from Australia. It can be bad economic news, worries from the central bank in Australia. The Kiwi, the New Zealand dollar, can also feel it. Okay? But despite periods of strength in the Kiwi dollar and the New Zealand dollar, and weakness in the Australian dollar, and we've seen that quite a few times in recent years, it seems that reaching parity between the two currencies is sort of impossible. We never get there. Just a small anecdote. Okay, another correlation, milk prices. First of all, dairy products, everything related to milk. It can be milk powder, it can be cheese, it can be anything that is produced from New Zealand's vast amount of cows, the milk. Dairy products are New Zealand's key exports. That's why we have an outsized reaction to anything related to milk. Once every 2 weeks we have the GDT, Global Dairy Trade Price Index, and that is a big market mover. Okay, happens every 2 weeks. Prices can remain almost unchanged or jump by 10%. Anything is possible, and fall by 10% of course, and it's always a big mover on the kiwi. And in this case, the kiwi certainly moves on its own, unrelated to the Australian dollar. And the impact of this global dairy trade, this key export of New Zealand, it lasts for quite a few days. Not only it's published in the European afternoon, early US morning, that means in a period of high volatility, not in the New Zealand hours, which are thin, and it has an impact for a few more days. But New Zealand, of course, it's not only about milk. Let's talk about other commodities. Commodities often move together, and sometimes these commodities are not related to New Zealand. For example, oil prices. Canada is the biggest exporter of oil among these commodity currencies, the Canadian, Australian, New Zealand dollar. But we often see a correlation. We see if the price of oil is on the move to the upside, also the New Zealand dollar moves. And of course, when it falls, it goes the other way. And even if the price of milk does not move, the rise in oil, the rise in iron ore, the rise in copper, in wheat, in coffee, can sometimes see the Kiwi dollar, the New Zealand dollar, get carried away as well. Decoupling between these other commodities and the New Zealand dollar is easier to see after the GDT. When we have the global dairy trade once every 2 weeks, it has a bigger impact on the Kiwi dollar, but when we're far away from that, the Kiwi dollar, the New Zealand dollar, is impacted by other commodities. Okay, and yeah, in this case, when we have the GDT, the New Zealand dollar moves on its own. Third topic, if you're trading the New Zealand dollar, you're trading it fundamentally, we have very few indicators, similar to the Australian dollar, but even a bit more extreme. So, like in Australia, GDP, gross domestic product, CPI, the consumer price index, inflation data, released only once per quarter, no revisions. And also job figures, okay, employment, which is key, like the non-farm payrolls in the United States. In New Zealand, it's released only once per quarter, same with retail sales. Luckily, we do have things that complement that. In general, these indicators are also released relatively late. So if you compare it to the United States, we have the jobs report on the first Friday of the month, just after the month ends. And in New Zealand, it takes around 1 month, okay? In this case, 1 quarter. So, and the same goes with other figures. They really take their time there, but it still has an impact. Each indicator, naturally, is a big mover. Because we have less of them, it makes them bigger movers. Again, so many figures are released only once per quarter. But we do have other indicators which are unique and special to New Zealand, as we have retail sales only once per quarter. Every month we do have a measure of credit card spending. A lot of the expenses are made using credit cards, and then we have it. These figures from the credit card companies, they provide us with some more recent indicators about how consumers are spending in New Zealand. And we also have another figure related to inflation. It is an official figure, comes out from the Reserve Bank of New Zealand, called inflation expectations. It also fills in for CPI. So we have, you can say we have 2 inflation indicators in New Zealand, or 3, of course: producer prices, consumer prices, and inflation expectations. Inflation expectations is also quarterly, but at least it is another indicator released separately, provides more information. Okay, and another indicator unique to New Zealand: visitor arrivals. Tourism is an important sector in the economy. Lord of the Rings, beautiful views there, and visitor arrivals provide more information about this sector, and it also moves the currency. Okay, our fourth topic related to the New Zealand dollar is interventions. When we talk about interventions, we often think about the Swiss National Bank or the Bank of Japan, but it also happens in New Zealand. The Reserve Bank of New Zealand does not like the strong New Zealand dollar. It's bad for exports, makes them less competitive, and weakens inflation. and makes it inflation too low. So sometimes they intervene. How do they intervene? They want to, on one hand, they want to remain champions of trade. They're supportive of every trade agreement, and then they wanted to make their exports, their trade more competitive. And how do they intervene? So they usually just complain about the New Zealand dollar. It can happen, the Reserve Bank of New Zealand can complain about it at the rate decision, or in testimonies, or in speeches, and they routinely complain about it, I believe, more than any other developed central bank. They make changes in the wording of the statement to reflect. If they talk, for example, about that the strong New Zealand dollar can have an impact on inflation on exports, it's an opinion. It's sort of a relatively weak statement. That means they complain about it, but they're not very unhappy. The situation is relatively okay. When they say a strong New Zealand dollar is hurting the economy, it has already a bigger impact. That means that they're very unhappy. That's a complaint, and usually in these cases we have a bigger reaction. So you should mind these wording changes. If they're happy or complain just a bit about the strong New Zealand dollar, that means that they're okay with it, and usually it could lead to a rise in the New Zealand dollar because they're seen as relatively happy. When they complain a bit more, then we can see a negative reaction. If they're unhappy, then we can see the New Zealand dollar falling. Okay? Again, repeated in speeches, rate decisions, and it always has some impact. So markets listen carefully. Similar to economic indicators, the Reserve Bank of New Zealand, Governor Wheeler, at this point in time, and his deputies, they don't talk too much, but when they do talk about the currency, it has an impact. Interventions. And sometimes they actually really intervene. They usually do it very quietly, okay? They don't make a big announcement. They don't throw all their money into the market to weaken the kiwi dollar. And the timing is, I call it hitting the kiwi when it's down. They sort of go with the trend. To make the trend your friend is also probably what they say at the Reserve Bank of New Zealand in Wellington. It means when the New Zealand dollar is already falling, or sort of has already peaked, reached its top and begins falling, they jump on it and push it even lower. They go with the trend. Okay, they don't try to fight against the trend. When they intervene in markets, not only complain. They complain when it's high, of course, but they actually intervene when they have a better chance of succeeding. Okay? And these interventions, again, they're done quietly. They're discovered only months later when they provide a report about their reserves, about what they did, but they don't admit it publicly in real time. Okay? A recent rise, just if you're watching it right now, July 2017, we're seeing the recent rise. It could trigger an intervention. It doesn't happen that often, but this is quite a significant rise. Okay, now for our fifth and last topic, for many of you, technical behavior. Consistently enjoys a more predictable technical behavior similar to the Australian dollar, but it has, it competes with the Australian dollar, but it has some nuances, some differences. Sometimes it's better than the Aussie, sometimes it's worse. So, New Zealand dollar against the US dollar, it tends to mark the top or the bottom of a range and then move according to this range, stick to the range. So we have a breakout to a higher level, it reaches some kind of high, then falls, then reaches this high once again, over and over again. Moves in pips are not huge, okay? It's not pound yen, for example, or other currencies that move quite a lot, but percentage-wise, the moves are quite significant. You can sometimes see days which we do not have too many moves in euro dollar, Aussie dollar, dollar yen, and you look at the percentage moves of the kiwi dollar, and they're higher than others, okay? New Zealand is the first market to open in the world. It's the easternmost point, of course, when we're talking about market. So it opens very early on Sunday, when it's still Sunday evening in Europe, or Sunday afternoon in the United States. And it's already Monday morning in New Zealand. And the New Zealand dollar reacts first on this thin Sunday trading. So percentage-wise, especially on Sundays, especially at the beginning of the trading day, then we have the biggest moves. All in all, conclusions about the Kiwi dollar. It rises with the global mood, similar to the Aussie, but it moves more specifically with milk, and only afterwards with other commodities when we don't have milk. It is influenced by the Australian dollar. Good news from Australia or from commodities, they move positively the Kiwi, and the other way around. It's another influence. There are relatively very few indicators, but they do have a strong impact. Naturally, GDP is only once per quarter, no revisions, jobs, retail sales, inflation data. And beware of interventions by the Reserve Bank of New Zealand. Not many are aware of it because they do it very quietly and they do it with the trend. But when their complaints become louder, it has an impact, and when they do intervene, it also has an impact. And all in all, the Kiwi dollar has an above average technical behavior, relatively predictable currency pair. Usually it marks the top or bottom of the range and then trades in this range. That's one of its characteristics. Okay, so I know not many of you trade the New Zealand dollar. I find it a relatively attractive currency pair technically and also fundamentally. Perhaps you have less opportunities to trade because there are less pieces of news, but the moves are significant and last longer. Okay, so thank you very much for coming. Comments and feedback are always welcome, and stay tuned for further webinars. Thank you very much, safe trading, and goodbye.